Good morning, traders and investors. Thank you for tuning in to Pre-Market Prep, the best place each morning to get your overnight news, your breaking news, definitely the case today, your trading ideas for the day, maybe for the rest of the week, definitely some good education today. Let me look down at my clock. Is Wednesday, February 12th, 2025. Will the CPI data today get equities out of the range that they have been trading in? We will find out at 8:30 a.m. Eastern time. We're going to preview the figures in just a second here, and then we'll do it again real quick around 8:25 a.m. or so. Got some interesting price action, of course, in Tesla overnight. Also looking at Intel on the earnings parade here today. SMCI, Upstart, maybe VRT, maybe a little DoorDash, maybe Lyft, maybe Zillow. We'll see what we can get to today. We do have a lot of good info on the show today. Our guest today at 8:35 a.m. Eastern Time, Blue Putnam, former chief economist at CME. He will be giving us his quick reaction on the CPI and what it means for his call last week. Might have involved the R word. I'm not going to say it, but we'll see what Blue is thinking here in about a half hour. Also, a little bonus guest today at 9 a.m. Eastern Time on Wedbush Wednesdays, Aurthur Bass, Managing Director, Fixed Income Rates and Futures. He'll be talking about what he thinks the Fed is going to be doing throughout this year and heading into next year. All right, folks, we're going to jump over and take a look at the markets here real quick. But first, as always, let's run that intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Good morning, Christian. How are you,
Good morning,
sir?
guys. Good morning. So let's do a quick rundown of where the markets are. S&P futures flat as a pancake going into the CPI. They have risen a little bit here and off the lows. We're going to just bring up Nasdaq futures here too because they're doing a little bit better this morning, just a little bit, up about 0.2 of a percentage point. Small caps, which I find interesting this morning, are actually leading this morning, which to me is very interesting. They're up about 0.4 of a percentage point. Very, very range bound for small caps, but also for all the indices. Note again, we're going to preview the CPI in a little bit, but just looking at the implied moves, the S&P is implying about 0.7 of a percentage point move today with that economics. Keep in mind Powell's second day of testimony too in Congress.
Good call.
And small caps are also implying about a 1.3% move. They love to move on big economic data. So they're implying a little bit more of a move. Let's just check out commodities really quick. There's not a lot of big movers.
Sure.
It's pretty quiet in terms of commodities. Crude is down about 0.9 of a percentage point. Gold is also taking a little bit of a breather. That's down about 0.5%. And last one I wanted to cover here, because I think it's at a very interesting point right now. Whoops, I got the wrong thing up here. But I wanted to cover Bitcoin futures. I'll try this again because this is kind of just barely hanging on here. I'm watching 97,585 in Bitcoin, but you could see the strength, the recent strength in Bitcoin has been getting faded. It has not been able to close on its highs, and it could be a potential breakdown. Excuse me, if it doesn't get back above 97,585. All right, guys, there's your
Awesome.
quick market rundown.
Appreciate that. Thank you. And even before we bring in Dennis here, let me just give those CPI figures that we'll be expecting at 8:30 a.m. Eastern Time. The base reading on a month-over-month basis expected up 0.3. That's going to be up 2.9% on a year-over-year basis. And then the core figure for CPI, which excludes volatile food and energy divisions, month-over-month the same, up 0.3. Year-over-year, we're expecting up 3.1%. Now we can bring in Dennis. Dennis.
I'm here.
Hello.
Thanks for the rundown, Brandster. Great job with the
Yeah.
opening. Christian's always good. What's going on, guys?
We got a few earnings, but you guys were like a little bit more intrigued in some price action in a couple stocks. Let's just start off with the kind of really interesting one. I think Tesla down last 5 days, almost 15% over the last 5 days. And then what do you know, Dennis, this morning, or maybe it was late last night, we had a new buy rating from an analyst at Benchmark, kind of stuck their neck out a little bit on
They
this
did.
price target, a $475 price target. You guys were all interested in this price action and this note today. What do you think, Dennis?
Yeah, the stock was weak even this morning here, and sometimes a stock just needs a vote of confidence. I mean, Tesla definitely oversold. We were looking just at the charts here, 419 when we ended January. Basically, well, we started on January 31st at $419 was the high that day. So basically, in the month of February, the stock has dropped 100 points. That is a huge move. So definitely oversold. It needed something. Like, it was even down again this morning. Yesterday was just a terrible day for it. It really needed a vote of confidence, and that's what it just got from benchmark. So it's, analysts are like traders, right? Like, if they have a note, they don't always just publish it right away. Sometimes they're trying to time when to put the note out there. And they're probably looking at, maybe they had this note written a couple days ago and they're like, it's coming in, wait for it, because they're marked from the time that they obviously release the note. The day they release the note is when they're going to be marked on whether they're doing obviously a good job or a bad job. And I mean, that is their job, to call price. So benchmark Mickey Legg initiates coverage of Tesla with a buy rating and a $475 price target. So that is why Tesla has turned around here significantly this morning. At one point in time, it was down $4 or $5 again this morning, but this note came out just around 6:30, just before 6:27. I had it released at. And the stock really started lifting on this, obviously. So Tesla gets a vote of confidence. That's the good news. The bad news is the stock is still definitely below a lot of moving averages here, Christian. So I'm going to send it to my momentum trader. Is there a chance? Are you telling me there's a chance here, Christian? What are your thoughts on Tesla for the turnaround story here today?
Well, a couple things. I do like when analysts make calls like this. I don't like when the stock is up 20-30% and they're just kind of chasing and they're like, okay, we're going to increase our price target another $20, and it's really just because they're just matching what the price is doing. But I do like when analysts come out and they say, okay, the stock has gone down enough, now we're going to come out and we're going to say, we're going to come out with our rating. So I'm more of a fan. I think that's
me too.
More like better information. From a technical standpoint, my level was 338 yesterday, and I had talked about that probably a couple days ago. And that level is where there's been a lot of volume previously that we have not revisited. So we took out that level yesterday. So I began to kind of watch it, and we just kind of price blew past that. So I didn't do anything with Tesla yesterday because I was looking for price to kind of stabilize around that level. It's a level of interest, and I have to see buyers start to kind of defend that. I do think that it looked like, in the after hours, to your point, like things were starting to stabilize a little bit, and then we took another leg lower. So I think this is going to be a very interesting day for Tesla, and one that you might want to keep your eye on. I kind of want to buy the dip in here, so I'm not sure to do that yet. How I'm going to accomplish that. I mean, there's several things that I could do. If I think that the bottom is in, I could sell some put spreads, right? So I can kind of finance, because the options premiums are juiced. So I could do that. But you're adding a little bit of, you're adding risk when you sell premium like that. So I will do that out of money, maybe a month or two. The other way I could play it, of course, is just to basically use the previous, actually like the low of where we were, and just basically go long here versus 322. Another way, of course, I would not go outright long calls because the premium is pretty juiced. I would probably do something like a call spread. So there's several ways to kind of skin a cat if you're looking to go long here. The easiest way is probably to go long versus the low of the pre-market session, which is right.
What's the low of the pre-market session? Do you have that number?
I mean, I'm looking at like 320.
Ballpark it on the chart.
Yeah, I'm ballparking like 320. So that would be a level to go to use. You could also use, whatever you decide. By the way, like, nothing is an exact. It doesn't have to be an exact science, right? As long as you've got a level to say, hey, I'm going to try this, and so that basically you're planning out your trade. You don't have to be precise with a level. You could always, if that level gets violated, then you could always just put your alert back on the stock. Sometimes you'll see another retest, and then the stock could get going too. So in any event, that's how I would, the main thing is you you have a plan for what you want to do rather than just like ad hoc, oh, I want to go out and buy it. Well, what happens if it doesn't go straight up? What are you going to do? So
Yeah.
plan this out, have a strategy, and then execute the strategy as your plan says.
Excellent analysis there. And I mean, it's all about when you're setting up, especially these swing trades, having your contingency plan put in place first. So I love this setup that you're saying, okay, pre-market low, which we've had Rich and Richard both confirm it's 320.07. So I mean, maybe that's your stop out. So you're risking yourself $14 if you're buying at 334 right now. Maybe it comes in a little bit because you're obviously gonna have people who bought it yesterday. Maybe you can get it at 330. Very important for this stock to hold green today, though. That's what I would say. You've got the vote of confidence the stock needed. How does it respond to that? I'm probably waiting to see how it responds. And I'm not against rebuying some Tesla because I've sold, I sold the majority of my position a lot higher. So I'm not against rebuying some. I don't know if I'm striking today. I kind of want to see the story play out here a little bit more. And I think we're going to have more time here yet. But I mean, there's still a good long-term story here. I think, obviously the politics is an issue in the short term, but in the long term, they're still doing a lot of things. And that's why I still held, a small piece of my Tesla original size position because I feel like, the long-term story is still intact. So, I mean, I think setting it up as a trade, though, the way Christian's doing it, giving yourself a stop out, 320, I like the stop out as well. Again, when you get a good catalyst and an upgrade or a buy rating can be that, you have to see the stock respond. The initial response is excellent. The question is, does it have follow through? Does it get people excited again? Does people get saying, okay, now I'm going to strike? And if that's the case, the stock could be back up at 350 in a hurry because it's definitely oversold. So just keep that in mind when you're trading it. Obviously, it's not, just, simple, but I think having that 320 stop out is a good start.
Yeah.
What do you guys think? What do you guys think? Go for it, Christian.
I was just going to say real quick, that's what that flexibility of hey, taking some off the table when the stock is ripping higher and going up very sharply, taking some of your position off gives you that flexibility. Now, Dennis is in a good position, and you could tell he's not in a rush. He could do it today. He could could kind of let it digest a little bit, but he's got that ability now to be nimble and say, okay, now I'm going to add back on the dip.
Should we just end the show right there, guys? Go out on a high note?
No.
Dennis.
No, definitely not. We got other high notes here. My portfolio
I like it
today because I still have that dog of an Intel in there.
Let's go
and
into
the
that.
stock's bouncing a little bit here this morning, and we hunted for the catalyst, and our good Christian Fromhertz did find it here this morning. Christian, if you want to read the catalyst note here, because you were the one that hunted this one down, it was a little bit tricky to figure out this morning why it was up 5%. Comments from JD Vance?
Yeah, so I hear the headline that was written today, I think this is by MarketWatch, is Intel now a Trump stock? It surges after upbeat comments by JD Vance. This happened yesterday morning. Vance's bullishness on U.S. chip making bodes well for Intel's manufacturing efforts. Shares of Intel surged on Tuesday after Vice President JD Vance made bullish comments about semiconductor manufacturing in the U.S. and an AI summit in Paris. And what was interesting about this too is there wasn't that much outside of Intel that was really moving in the semi space. They were doing okay yesterday, but this one by far and away. And what was really interesting was the option market yesterday. There was a boatload of calls that were trading yesterday. I'm looking at just the open interest changes. The March 25 strike calls saw an increase of 27,000 contracts. The open interest on that line is now 65,000. Also, the June 2026, so the leaps, also saw about 13,000 of the 20 strike calls increase, and that brings the open interest 60,000. But it was just repeat. I was watching machine gun fire type with options. They just kept on going after it with Intel. So very interesting, and to my point, I want to hear what Dennis has to say about the stock, but it always goes to show too, stocks that are in downtrends, which Intel is in, they can have vicious moves on the lows, and again, it doesn't mean that the trend is necessarily changing here. It just means that any positive news for the stock could really get it going, especially when you've got that option activity on the tape.
I'm still long a small piece. I've eaten the loss. I was in it originally at $33, and I think I sold it like 24. So I'm the only person that actually has a trading loss because nobody else in the whole world takes trading losses. That's not true. Christian Fromhertz obviously does too. But on Twitter, you never find anybody that admits their loss. I'm down significantly, lost a lot here on the Intel, and I've held a small piece. I've argued multiple times on this show that it's a Trump stock. It hasn't materialized yet, though. So, I originally added to my position, which, you shouldn't add to losers, but I bought some at like $33. And then I bought some more at like 23. It popped back up to like 25 or 26 bucks on some Trump headlines there. And I think even after the election, it got a little bit of a lift, but it didn't last long. So we've heard this narrative before about Intel being a Trump stock. I kind of believe it is as well, but it just hasn't caught on. And the stock is just in such a gutter. It's in a cash burn situation here for a long time. Obviously, it's foundry business. We don't know where all this is going, how much money it's going to cost to get this up and going. So it's definitely a longer term thesis if you're in Intel. I don't think there's an imminent turnaround here, but could the Trump narrative prop it up temporarily? It is today.
Yeah, and I would say from a technical standpoint, just real quick, it has defended this $18-19 level. So yes, so while the stock is in a downtrend, it's doing a heck of a job. It's revisited that 18-19 level, and there's some demand down there because it has not broken those levels.
Let's go over to our start of our earnings parade here. We're going to start with the big one, Super Micro company reporting so this actually wasn't the earnings report. I would just mention it was preliminary second quarter, and it didn't look so hot. Not worse than expected for earnings and sales. Earnings 58 to 60 cents for Q2. Sales 5.6 billion to 5.7 billion. The Q3 sales and earnings per share guidance also not good. They cut their fiscal year 2025 sales. They did give some optimistic fiscal year 2026 sales, said they would be over 40 billion, which was higher than the expectation. But of course, what we were really waiting to hear was related to the SEC filings, and they did have some favorable commentary there. However, we did not hear from BDO. We heard from their internal auditor. We did not hear from BDO. What did you guys think of the SMCI news and the move higher here today? I'll let you go first, Dennis.
Okay, so the initial move was significantly lower, and it's because the quarter was a mess. The quarter, they missed, they lowered guidance, they did everything you would not want to happen. Stock went from 38 down to the 32 handle, believe it or not. $32, this thing traded at last night. Was down there for a minute or two, and then the obviously the buy the dip crowd comes in. But the main reason they came in was to what you were saying, Brentster, is that they said from their internal auditor there's going to be no need for restatement. They also said that they will get their filing, which we've been waiting for, done on time. It's due on February 25th. They said they're going to get that in. So that, all of a sudden the company's saying we're not getting delisted. So that is why the big rally here this morning, the 15% rally. One issue I do have is we didn't really hear from BDO here yet. So the independent auditor that said, the statements are good, we're not going to need to obviously restate anything, is one of their board members. One person, one of their board members, internal. So, I mean, I really wanted to hear it from BDO. I didn't hear BDO come out with anything yet. Maybe I missed it, but I did not hear anything from BDO. Maybe it happened this morning when I was sleeping because the stock is up more, but I did not hear it. I don't think BDO commented here yet. So that still raises a red flag for me. Not saying BDO could just say all clear. I think BDO says all clear, the stock pops $10. Not joking. Because still, even with the lower guide, this is one of the cheapest AI stocks out there. If the numbers are no good, again, it's still an F here because I didn't hear from BDO. If the numbers are no good, then, the stock obviously plummets. So I think we're still in a situation here where it's not all clear yet. It's looking good. The auditor obviously, says everything is good. Sounds like they're going to get the filing in time. Sounds like there's not going to need to be a restatement. As long as BDO doesn't contradict any of that stuff, the stock could go significantly higher. So the question is, does the market wait to hear the official stuff from BDO, or does it continue to buy it on their internal auditor? Right now, The market's just excited. They're buying. Again, I've said this before. This is one of the cheapest AI stocks out there if the numbers are clean.
Well, here we go. So this is what they said. They said that. So a couple of things regarding the earnings. They said that we believe that the company lost deals to its 10K filing delays, but 2026 view implies its reputation is largely intact. And then
Ooh.
here's the new deadline that they set. Supermicro said it aims to file outstanding 10K and 10Q by February 25th deadline. So yes, we have not heard from BDO, but they think that they can get this report out in 2 weeks. So that kind of provides that confidence to SMCI, and the stock comes back out to those highs that we saw from the other day.
Yeah. So the
All right,
question really remains, do you want to trust the independent, like their own auditor, their own internal auditor, or do you want to wait for BDO? The market doesn't wait, and they're not waiting here this morning. They're saying, I think it's an all clear, and the stock is cheap, and they're buying it. And you know what? It could continue. I'm going to probably sit this one out. Sometimes it's just a tough call. I'm probably sitting it out until I hear more from BDO. I was in the Supermicro, trade for a long time. It was a fantastic first 6 months of 2024 for me in that trade. I bought it originally and obviously pre-split. I think, did it do the 10 for 1? Is that what the split was? Do we remember? Was it 10 for 1 or 4 for 1 or 5 for 1? I can't even remember what the split was. So I know I paid $192 and I ended up selling at 500, 600, and 900. It was awesome. But then I re-entered at 700 on the way down, and I ended up selling at I don't know what it was, 600 or 550. So I got hit on the back half of it, trying to call a bottom. And then obviously the report came out, from Hindenburg, and the thing came down. There was all kinds of problems. So I think actually it was like a 5 for 1 stock split or something. So again, we round trip that whole huge move because they don't trust the numbers. If we get BDO and saying, yes, you can trust the numbers, man, Katie bar the door to the upside, because I think you go way up on that. I don't know when we're going to go from BDO. We don't have a date.
Dennis, I like that you are keeping your conviction on this BDO thing too. You've been saying we need to hear from BDO, and I like that you're being convicted here on that. Let's go to our next earnings play. It's Upstart. Shares up what is it? About 25% here. They reported some strong results, earnings 26 cents, sales about 220 million. Analysts were looking for down around 182 million for their Q4 sales. Strong guidance too, actually really strong guidance. They gave fiscal year 25 sales about $1 billion. Or analysts were all the way down at about 840 million, and shares are certainly reflecting that strong guidance here today. Which one of you guys want to start with a little Upstart commentary?
I'll start, and just we got the big move from a firm 2 days ago, and Upstart, its brother-in-law. They're very similar, and they do move together. I pair trade these things together all the time. Really didn't, Upstart really, didn't pop that much on the Affirm numbers. So it's set up actually pretty well. If you were going to listen to, what Affirm was doing well, it's kind of, thinking maybe Upstart's doing well too. And then boom, they do. Upstart's very prone to huge moves on earnings. Last November, we saw the same thing. Fifth stock goes from 55 up to 86. Didn't hold it. So now we go from 67 up to 84. Same area where we failed before. I mean, fool me once, shame on you. Fool me twice, shame on me. I'm not chasing Upstart 25% because if you did that last time, and 2 days later, it gave back half the move. So I'm probably just sitting this one out here too. Again, as a trader, you don't have to swing at every pitch. You don't have to trade everything. We give commentary, we can give some thoughts, but sometimes it's just good to just sit back, and say, hey, this one's a tough call. I'm going to sit back. I think, I hate shorting stocks that go up 25% because sometimes they go up 30. But, we're coming into a resistance point. I absolutely can't chase it at this point. Christian, what are your thoughts?
Yeah, I think so. Number one, this stock really, the option premiums are really juiced. I think that it was the options market was implying about a 22% move. So you can't play this name outright calls or puts or anything like that. I played this through a call spread. I did the trade that I was looking at was the 71.76 call spread that expired for this week. That should. We'll see how it goes, but for now, that trade looks pretty good. From a technical aspect, you bring up a great point. It goes right to those previous highs. which again is a big move. So it's tough to kind of get that whole move right away. But I would definitely be watching those previous highs, maybe around like 82, see if the stock can hold in there. And, if it holds in there for the day, then I think you can kind of watch it and be patient a little bit and see if it can begin to kind of take out those previous highs and start marching up to my next point of interest, which is about $95. But I would watch to see what it does. And if it starts to break above those previous highs, then that buyers are starting to come in and they like it. They're not selling it, because that remains to be seen here, whether or not that's going to get rejected at these previous highs, or if the market wants to continue higher. Which kind of brings us to, I think we're going to go over a couple more earnings reports too, but I just want to fit this in with a couple
Sure.
minutes to go, because it's going to depend on what kind of day we're going to get. I'm just going to stop screen here, and I'm going to present here, show a different screen here. See if I can do this really, really quickly.
You
There
got
we
it,
go.
Christian. You
Yeah,
got
I
it.
got it. So I know this is, oh no, that's the wrong thing to see. So let me stop screen, present, try one more time, share screen. I want window. There we go. All right. So there you go. This is what we've got on deck here with about 4
Woo!
minutes to go.
I like it.
We've got the CPI numbers month over month. They're expecting plus 0.3. So you annualize that, and they're looking for like about a 3.6%. Now, I know that's quite different, but I'm doing my own little math there, because I think that this headline number is going to be most important. We'll also look for this core number too that people seem to be fixated on.
Yeah.
And then you've got the year over year. They're looking for 2.9%. So that's what we've got. I'll leave this up here or maybe I'll just stop sharing for a second, but I'll come back to this so that you can see the numbers hit real time.
Okay,
We've got
awesome.
Blue
I
in the
like that.
background here too.
do.
We're going to bring Blue in for the numbers as well, so that'll be
Yeah.
exciting here too. Blue, we're going to get you in about 2 minutes here, so
Cool.
get ready because we're coming for you. I'd love to take you through the number. So go ahead, Ben.
Dennis, you want to do Lyft real quick?
Yeah. Let's sneak one in there. We'll get
All right,
last night
let's
covered
sneak
up,
one
because
in.
then we're done last night's earnings, and then we just have this morning's earnings to cover.
Sure. All right. So Lyft shares down about 13% this morning. Sales did beat 1.6 billion versus 1.56 billion estimate. I think the guidance wasn't so hot. They said
No, it wasn't.
Q1 gross bookings growth 10 to 14%. What are you thinking on Lyft here this morning, Dennis?
I think it could get a dip by, because you're at a big level here. 1250 has been a huge level all year, so it's stalling and stopping and getting support where it should. What's interesting is they get to the deal with Mobileye a couple days ago, and stock blast off on that. Had the key reversal into it. You never want to see that. What that means is it made a new high and then closed below the previous day's low. So you never want to see that from a technical perspective, because those are turnaround things. And then obviously we're into earnings, and now we get hammered on it. So you definitely have people caught in this. That's the only thing I would say, is if you're coming in buying the dip, you have a lot of traders really caught. They caught the news probably on the wrong side a couple days ago with the Mobileye thing. And, obviously now, if anybody was thinking it's going to have an earnings report, that's not the case. So it could be dead money for a little bit, but you're getting support where you need to get support. If you're taking a shot on it, 1250 is probably the level right where it's at right now. I don't know. I don't think I got the guts to take a shot on this one. It wouldn't surprise me if people bought the dip, but at the same time, I don't know if I'm convicted enough to jump in myself.
Tough one. Yeah, that's a really, really tough move. That ramp into earnings. Oh man, that's
ramp in, and then the turnaround right yesterday before the print. It's always a scary thing. It's like people in the know, like, get out of here, it's gonna miss. Or people thought, that was gonna miss.
All right, 1 minute here till our CPI reading for the month of January. You guys want to bring in Blue as we're breaking the numbers? Should we bring him in here?
Blue, you want to come in? Thumbs up, Blue.
Here, let me run
Blue's
the.
Good. Let's bring Blue in for the number. This is our economist. This is the guy.
Here we go. Blue Putnam, former chief economist at the CME. How's your morning going, sir? You ready for this number?
I'm ready for the number. I'm tired of shoveling snow.
Yeah.
Where are you?
Where
are you, Blue?
We're on the Chesapeake Bay. We got 6-7 inches of snow last night. Amazing.
Woo!
It's been that year. It's been the year of snow here. We're due to get another snowstorm here in Ontario tonight, and I believe they're calling in my area another 12 to 18 inches. That just piles on already like 8 feet that we have out there. So it's been crazy. 12 seconds. So
Here we
I'm
go.
gonna let you, Brentster, you run with it here.
Let's see what's going on. All right, about a few seconds here. CPI for the month of January. We're going to look at that base figure first.
Oh, it's hot.
Ooh, a little hot.
That's
0.5%
0.5.
versus a 0.3 estimate. The core
Eggs.
reading 0.4% versus a 0.3 estimate. Let's do quick year-over-year figures. The base reading year-over-year up 3%, and the core CPI reading year-over-year up 3.3%. Economists were looking for about a 3.1% increase there. Christian, Blue, what do you
Wow.
guys think of these figures so far? How's the market reacting, Christian? Before we
Not
get to
good. I
Blue?
mean, that's a very big surprise to the downside. We're down about the indices are down about 1% right now. I'll bring that up in just a second. Let me just get this data out here. But that's a big miss. 0.5 versus 0.3.
That's hot.
Holy cow. That is really hot.
Yeah, we'll have to dig into the number. They revised all the seasonals, so that can change things. But we know that the number of commodity prices were up, particularly some food items. You know, I don't know if you bought any eggs recently, but I certainly haven't. You know, so you know, there's a couple of special factors going on, but it's definitely an upside surprise, and you know, this will keep the Fed on hold for an extra couple of meetings.
Uh-oh. Do you like that, Blue, or were you hoping to get something in 2025 here?
No, I wasn't particularly hoping. Hope is not a strategy, but you know, we're stuck at 3% inflation. We came down from 9, we got to 3, and then we're stuck, and that's just the reality. And you know, we got tariff wars coming, and that may be a one-off price change, but it's still
Sure.
going to happen in 2025. And we know from what happened in the supply chains back in the pandemic that one-offs destabilize markets. We're gonna be at this 3% range for a while.
So, Blue, you had an interesting little note here on the Taylor rule. I want to hear about that. I'm not familiar with the Taylor rule. What does that say about rates in 2025?
It actually says that there's room to make a small cut. The Taylor rule
Okay.
is Professor John Taylor. He did this work in the early 1990s, but he's quite famous for it. And it just basically says that if the Fed puts equal weight on unemployment and inflation, then what should they do? And you have to make some assumptions about what the steady state of interest rates are and some things like that. But basically, the Taylor rule would have you cut another 25, max 50. So a small cut based on the Taylor rule. But if I run these numbers today, that might disappear. With a little bit of a higher inflation, the Taylor rule was, let's just say yesterday it was up for a cut and today it might not be.
Interesting. Yeah, I'd never heard of that Taylor rule. Something I got to look into. So what's next for inflation and unemployment? You know, if the Fed is so data dependent right now, I mean, what are you seeing on the radar for maybe even more importantly, like into 2026, Blue?
Well, Jay Powell made it really clear in his congressional testimony that there are two reasons why the Fed can cut. If inflation comes down, the Fed can cut. Well, that's not happening. So we cross that one off. And then he said, you know, we follow employment. So if the unemployment rate starts to rise and the economy weakens, then we would cut. So that one's still on the table, even though we're at 4% unemployment and things look great looking backwards. We know that we've got tariffs. We know that we've got immigration deportations. We know that we've got fiscal restraint coming. We know that we've laid off a lot of federal workers. All of these things are going to slow the economy from roughly mid-February on through the spring. So the Fed may see some rising unemployment starting in the data you get from March, which would be released the first Friday in April.
Sure.
So if the Fed's going to cut this year, it's probably not for a good reason. That is for a weakening economy.
So you want to go ahead, Christian? Go ahead.
I was just going to mention too, just the headline just came out. Because this is all about too, when this inflation data comes out, what the expectations are, whether there's going to be, where that timeline is for a possible cut. So that just shifted. Fed Fund Futures now pricing in the
Ooh.
next Fed rate cut to December from September. So that moves the timeline out a little bit further when you have hot data like that.
Yeah, now the Fed funds rate and most economists are not predicting recessions. It is my base case because I believe that transitions involve friction and that generally slows the economy down, but that's not the consensus view. So the pushing out of the Fed rate cut is based on these higher inflation numbers. I mean, if you look at the consumer price index, it's been stuck near 3% for over a year. And these month-to-month numbers are definitely not taking you down to 2. They're keeping you at 3 or maybe even a touch higher. So the Fed is not going to be able to cut with these numbers.
Right. So Blue, you came on the show last week and you were talking a little bit about the R word that we won't mention here. Just be careful. We don't want to say that. We don't want to say that word. I don't know that everybody that is listening today listened last week though. So I mean, why don't you just go into your kind of thesis on a narrow R word or a shallow R word, I should preface, I guess.
Yes. So basically, here's this. When you have a major policy shift, and we've got 3 of them going on. We've got tariffs, we've got immigrant deportation, and we've got fiscal policy restraint. You have 3 big policy shifts. In the long run, these things can work out well. But in the short run, they're going to be transition shocks. And so as an economist, you have to analyze the transition differently than the long run. And in this case, the shocks are going to cause frictions in the economy. And as I just said, I think they show up in March, April, and May with a little weaker economy. Now, I don't think we're talking about a serious recession here. And that's because the financial sector is totally fine. The financial sector is in great shape. You have deep recessions only when you have a financial crisis. Savings and loan crisis of 1990, the subprime crisis of 2008, things like that. That's when you get a deep recession. So we're looking more like what happened 2000, 2001. We had a tech wreck on Wall Street. We had 9/11. We only had 1 quarter of negative GDP, but we did have a little bit of recession according to the NBER. So I'm looking for a shallow recession occurring sometime this year. It won't last all that long, but it will surprise the market. And I think you're going to find more and more of the economist pundits out there and Wall Street guys talking, well, it's possible we got all these shocks to the system. That's all we're talking about.
Gotcha.
So Blue, we get more data this week. So tomorrow we get the PPI. That's what's tomorrow, Thursday, and then we also get the retail sales. Are you thinking that these numbers also kind of come out the same way in terms of hot data for tomorrow? Anything else on your time horizon?
Good question.
I wouldn't count on hot data tomorrow. The PPI is a different story. If you told me the PPI, I still wouldn't be able to tell you the CPI. It just wouldn't. They're not as related as you might think. And the PPI is much more commodity related, and it's not final commodities. I mean, it's the raw commodities and things that go into making things. So it may be a little hot. It might not be. I wouldn't count on that. But the PPI does not move markets. The Fed is very much into the CPI and the PCE deflator. Retail sales, I think it's a little bit early to see some weakness, but you might. And that's because of what happened in December. A lot of companies and individuals as well bought stuff for the holidays, but companies actually stocked up on inventories. And so some things got brought into the fourth quarter that may not be in the first quarter. I wouldn't count on much on that either, but I'm looking for an okay retail sales number. Not market moving one way or the other.
Just a general question here, Blue. Until we get you back on air, are there any other economic data points that you would encourage our audience to take a look at over like the next few weeks?
Well, I do think you have to focus on March 14. That's not an economic data point exactly, but that's when the government funding runs out, and the
Okay.
Congress has to pass a law to keep funding the government, and they will, I think. But it's highly controversial because of all these new policy initiatives. The Republicans have a razor thin majority in the House, and if they need Democratic votes, well, they just might not get them this time around. So I would watch March 14. By the way, you don't have to watch it until something like midnight that night, because Congress can't do anything until a deadline.
Right.
Now that will the politics changes in April. April 1st, there are 2 elections in Florida for congressional seats that were vacated by Trump appointments, and those will go to Republicans, and then they'll have 2 more seats to count on. That's still not a lot, but it does work in their favor a little bit. So I'm really nervous about March 14th. So it's not an economic piece of data, but I think it's an important date.
Great. I appreciate that heads up. I'm sure our audience appreciates that heads up, Blue. We're going to wrap here with you, Blue. Thanks for coming on and looking at these CPI figures. Blue Putnam, former CME chief economist. I hope you're all done with your shoveling here today, Blue.
Pretty much. I am, actually.
Okay, good. All right. You have a good day. We'll see you next time, Blue.
Thank you.
All right,
Thanks,
later.
Blue. All right,
All right.
just looking at what we're, let me see if this is removed. There we go.
There you go.
The S&P. So where we're at right now, S&P futures are down about 1%. NASDAQ futures are down just a touch more, down 1.1%. Really what's getting hit hard is the small caps. Again, the small caps really move on economic data. The VIX right now, we're sitting at just above 17. I think that'll be a good level to watch for the day. So we're not blasting off to like a VIX of 20 right now. I mean, it's a pretty dramatic miss there for the CPI and showing inflation's running hotter, but we're not taking out the range. So going back to like what we know with this market right now is that we're in a range. And I've got the SPY chart up, just the 1 hour chart. So you can kind of just see this range that we've been in, which is just crazy. We've got this pattern here of lower highs. And then we also have this pattern here too, where we're kind of holding support. So even though like if you're looking at like a 5-minute chart of what just happened, like it's pretty dramatic, but overall we haven't taken out Monday's. I mean, we're still pretty far from Monday's low. So, excuse me, this is Monday's low. This is last week's low. So yeah, we have gone through Monday's low, but there's some support back here, and I'm watching 596.48. I'm just going to bring you through these charts really quickly so that you can just kind of see. These are all 1 hour charts that we're looking at of the indices. Q, same thing. We're kind of at Friday's low. But again, this is also like a little pattern here of lower highs that we've got in the short term, basically since the end of January. And we're just continue to be in the range. IWM is a little bit more susceptible here. Going back to this is, I think we're looking at the beginning of the month's lows right now, where we just bounced off of a little bit. So that's what I would be watching with the small caps to see if we can hold this this low right around 221. So that's what's going on with the equity indices. We didn't really talk about bonds, but bonds, of course, all of these things kind of moving around. But the 30-year bond futures are doing the same thing about S&P futures. They're down 1%. Again, this is the long end of the curve that we're looking at with TLT.
And we'll be getting
so much to chew on here. Sorry, Brent.
Dennis,
I just wanted to come
no,
and
you're fine.
because I'm gone for 15 minutes.
How'd you do?
I was not ready for this number at all.
Oh no.
So I'm scrambling and trying to move out. I was not ready for a 60-point drop here on the S&P. But worse is the TLT. I mean, this is always the lie detector test. I know you guys just covered it, but I want to go back to it again. I mean, bonds going straight down on this. So we got to just lay the groundwork. You got a hot number, which is 0 tariffs in here, folks. 0 tariffs.
Ooh,
tariffs have not impacted anything yet. We can't be going hot into tariffs. So that's my concern. The only thing bailing us out is this relentless buy the dip mentality that's out there. So, I mean, the buy the dip mentality is still relentless. You cannot say, that the markets are going to just, necessarily shrug this off. I wouldn't shrug this off, but this market hasn't really cared that much. And it's always like after a day or two, it starts to forget. It is only a tick hot. I mean, maybe it's an overreaction in that case because we're 3% versus 2.9. We're only a tick hot, but nobody wanted to see us hot going into, tariffs around the world. And I mean, we can keep talking about, oh, well, there's a deal with Mexico, there's a deal with Canada, so we don't have to worry about them anymore. Now, it's 25 days, you're going to have to worry about them again. It was a 30-day deal. And if you think Trump's going to back down, he's not. No. So, I mean, those are all considerations here, too. I think you got to be very choosy with what you're buying on the dip here. Tech stocks probably still do well. AI stories still intact. They don't care as much. NVIDIA stock like NVIDIA doesn't care as much about tariffs as obviously a small cap stock. So if I'm buying dips today, not saying I necessarily am, but I probably will be, I'm looking into those tech names like NVIDIA. Those are probably the names that may bounce back quicker. Tesla's holding up fairly well. We know we got the buy rating from benchmark. It ticked red, and now it's coming back green because the vote of confidence is in there. But I think if you're really looking for stocks that could, like bounce back here, I think you think the tech names more than anything. I think you probably maybe shy away. I know it's tempting to come into small caps here, but the kind of ground zero to what Christian was saying, the kind of ground zero for this, they need lower rates. They need rates now. Now Blue's talking about December. And then, we don't know what tariffs are going to do, if that's going to be inflationary, which, logic says it is. I mean, there's a lot of considerations here. So I want to come in and buy the dip. I think I'm doing it. If I'm doing it, it's going to be on tech names, though.
Right, because there is a move in interest rates, and which we just went over, and that's going to affect some companies differently. The companies that generally do a bit better is the companies that have plenty of revenue stream, have a lot of cash on their balance sheet. So you might see something like Apple outperform a bit today. And you could see, for example, Apple really hasn't sold off as much because they don't have to, it always goes to what that second, third derivative of the move is, right? You got a higher inflation number. Well, what does that do? It moves up the dollar, it moves up interest rates, right? So what are the impacts of those companies? The ones that are, it's going to hurt the ones that are a little bit riskier. Hence, your small caps are down. We're down about 2%. What are the futures down at this point here in small cap futures? They're down. So they have bounced. They're down about 1.5%. So you are seeing that bounce. Also, Dennis brings up a great point, is that this is just one data point. We're going to get tomorrow. We're going to get that PPI number, which could also move markets too. So you have that. So it's not like complete game over. It's certainly not game over for the data that we're going to get this week.
They've been obviously, we've mentioned NVIDIA, Gabe mentioning it as well. Good call. I mean, I just actually did just buy a little bit of NVIDIA here, just hoping for a bounce trade here. Okay. Probably hedging it against the overall market because I think NVIDIA could be up more than the market. So how I always like to pair. If the markets move down, I can actually still make money on that trade if the market moves down more than NVIDIA moves down. Apple is another place they've been hiding and sheltering in. It's not getting hit very hard here this morning. 0.55%. We've seen when uncertainty comes in, they tend to hide to Apple. So keep that in mind. Also, we should talk China because we didn't get to it here yet today, but Alibaba's tacking on more gains here this morning. So, I mean, we talked about this stock being the cheapest. I will say it again. I believe this is maybe the cheapest AI play out there. If the sentiment is turning towards China, and it's still a big if because, we've been fooled so many times into thinking, yep, this is the turn for China. But if it is indeed turning, this BABA at 116 is still dirt cheap. I mean, it's hard to chase it. It was $80. A week ago, or not a week ago, but at the beginning of the year. So you're talking about, a 40% move here in the matter of 4 or 5 weeks. So it's been a big move, but it's hard to not think about that. Baidu's another one I've been talking about, where, the stock got hit yesterday on the BABA deal because Baidu didn't get the BABA deal, but immediately bouncing back here today. And that's a good sign. So, I mean, if you're so worried about CPI, maybe look elsewhere too. You're so worried about what's happening in the U.S., maybe look elsewhere. We get into a big tariff war with China, things could change, but he's been lukewarm. He hasn't really been hitting China hard. He hasn't really been talking about China hard. It's so interesting, that, Mexico and Canada get 25%, China gets 10%. I don't totally understand, what the reasons are for that. They've said, your allies are getting 25, but your, supposed enemies are getting only 10. It's interesting, but I mean, if he's going to go easy on China, China could still end up being, a decent play here, even with the Trump administration. Still to be known, I mean, Trump could go anywhere. We know it's volatile. What he's going to say next, we never know. And obviously, Trump bumps and Trump dumps are going to continue to occur. But just, there's lots of places you can look. Baba's looking good here this morning again.
Yeah, that's very interesting point, because I just just looking at where it is trading pre-market, and it's up again. So there's another chart that I was just kind of, as Dennis has been talking, I've been kind of bringing up some different charts. One thing that I generally kind of just watch from time to time is what the ratio between the Chinese internet ETF is, as well as the U.S. Tech ETF. So, and you can look at this too. You could bring up FDN too, which is U.S. internet, if you really want that. But just to keep it simple, this is KWeb over XLK, and you could see in the short term, again, super short term. We're just looking at a 1 hour chart here, but there is a little bit of a movement here where the KWeb ETF has been outperforming a bit US tech. Again, just looking at this last couple weeks, we do have some outperformance, China over tech, and it leads to the point about, you would think that this would be an area that you would you may want to stay away from because of the tariff fear. But sometimes it's not. Conventional wisdom doesn't always work here, because it's outperforming US right now.
And just want to mention here, we are going to have on like a Fed, a fixed income financing expert here at 9 a.m. Eastern time, a little bonus guest for today on the CPI day. Wedbush Wednesdays, Aurthur Bass, he's managing director, fixed income futures rates. He will have some really good perspective on the Fed and what they're going to be doing over the next, 12 months or so. Do you guys want to give a couple quick earnings previews for tonight? Like, we're going to have Robinhood tonight. We're going to have Reddit tonight.
I'd rather go into the earnings that we missed this morning, Brian.
Okay.
Because we had a couple big ones. Vertiv is a widely followed retail name. AI trade obviously hit here this morning on their earnings. Called a bar thing. Maybe the bar a little bit too high, but we already got this stock hit, originally when DeepSeek came out. And then it's been clawing its way back. Got about half the losses back from the DeepSeek stuff. And now it gets hit here again. Again, a stock like VRT is not as interest rate sensitive as other names. Just give you the earnings here. 99 cents versus 82 looks fine. 2.34 billion versus 2.15 billion looks fine. Guidance slightly light, but not really that bad. I'm just looking 25 guidance at $3.50 to $3.60. Estimates for $3.56. So they're looking, the full year, $3.50 on a $100 name. I mean, you're 30 times earnings, not even around 30 times earnings for an AI name that's, widely followed. It's really not that expensive. So just think about that. VRT, not looking really, that expensive here. From at least from a valuation perspective, if you believe in the AI. Is this a name you'd look at buying the dip here on, Christian, or is the chart broken for you?
No, I think 110 is something to watch here. That's this level right down in here. That's the bottom of the range from where it was trading last week. So that's something that I would definitely pay attention to. But I agree with you. I don't think the numbers were that bad. I think maybe just the expectations were they were looking for a little bit more than that. I think this name also sold off last earnings, and it found buyers. So I don't know if it's the name, if I would want to jump into it right today. But I also wouldn't be surprised if they buy the dip at some point, this week, in this name. But good one to watch too. How about next? DoorDash.
Yeah, go ahead.
I was going to say yeah. So DoorDash had a crazy earnings reaction. This is another one of those too, where I don't know if you guys have the numbers, but
yeah, I got them.
Where it sold, the initial reaction was lower, and it was looking at the numbers. I was like, these are pretty good numbers. So go ahead if you've got the numbers, and then we can preview the price action.
Sure. So I see GAAP earnings 33 cents. That was about where analysts were expecting. To your point, Christian, sales did beat 2.87 billion versus a 2.84 billion. Just looking for a little guidance here. In terms of 2025, company expecting adjusted EBITDA as a percentage of marketplace gross value to increase on a quarter-over-quarter basis, and then again into Q3. So the guidance, looked okay. The report was largely in line, but shares, what are we doing up here?
Well, it's
up pretty good here. Yep.
So the initial reaction, another dip to buy in terms of after hours price action went all the way down to about like 180, 183, somewhere in that range, and that's a nice pop back higher. So this is another stock that's pretty well, I don't want to say loved, but liked, but pretty decent numbers. Yeah.
I mean, stocks at all-time highs, holding up fairly well through the number here too. I always say it. Stocks at all-time highs. Got to look at a 2-year chart, and then you go back to 2021 in the year of pure stupidity, and you always find a high that was higher. That was the tech bubble burst, folks. I know people are waiting for the tech bubble to burst today. The tech bubble burst happened in 2021.
Mm-hmm.
It was just pretty much for a lot of stocks as violent as it was, not obviously on the Qs, but on some individual names. They fell 90%, some of them, from the highs of 2021. That was the year of stupidity. So again, you back up the chart long enough, you can always find a higher high on a lot of these names, but it's come back, and earnings have grown, so I don't know. So far, so good, holding up well here. I'm lukewarm to just chasing things. I'm always am. And on a day you're down 60 handles, it's hard for me to come in here and buy something up 4%.
Dennis, did you want to cover Lyft earnings real quick? Did you want to go to a couple of earnings?
Well, we did Lyft already, I believe, didn't we? Didn't we do Lyft? Yeah, we did. Let's go. One more. Well, we could preview. Yeah, because I was just looking at some of the moves here. Some of them aren't really that significant. I mean, you have Biogen, CVS reporting. Maybe CVS. That's an outlier move. I mean, we haven't seen, CVS hated stock, but, we know 2025, some of the laggards turn to leaders. CVS, we talked about Walgreens, having a pretty good 2025 before it obviously had, the bad news as of late. But I mean, CVS has just been rocking and rolling in 2025. The calendar turn did awesome for CVS, closed at the year lows, and is now up, at $60 here. It's up another 5 points here this morning. Give us those earnings there, Brentster. CVS.
So 119 versus a 93-cent estimate sales. About 98 billion. Analysts were looking for about 97 billion. Guidance looked pretty good too. They see fiscal year 25 EPS 5.75 to $6. Analysts are up at 5.96. So actually guidance wasn't super great, but we have shares up about 10% here this morning.
Bar low, good enough is good enough.
There you go. Yep.
4% dividend, bit defensive today on a day that they're looking probably for defense here. Holding up very well. Heavy bid at 60, like lots of different bids. 60.02, 60, 59.99, 98, 97, 95. So you got multiple, buyers here right around 60 saying it's going higher here. I won't fight them today. I'm not going to be probably buying this again. These big moves are hard to trade, but I'm not going to say they're wrong either. This is not a Christian Fromhertz stock. When he's silent, you just know it's not a Christian stock.
Yeah, I mean, a lot of these pops for names that are in downtrends, it's going to be interesting with the day that we're having with the moves that we're seeing. Maybe this one can kind of hold in there because it's a little bit more conservative. But yeah, I would watch what it does right around this like 661 level. And we'll see if it kind of holds that. If not, it might be taking the profits on this one.
Look at the names reporting tonight here and look at these retail darlings. So two of them I'm going to highlight. You can probably guess the two. Reddit and Hood.
Yep.
And look at Reddit. Down 0.33%. Barely down. On a day where everything is getting hammered, the stock that everybody says valuation is insane can't even go down on a day like this. Hood, same story. Stock relentlessly higher. Has a tough day yesterday. Barely down here today, was way up last night, does report here tonight. So again, that strategy of owning, those well-followed stocks into the reports works here today too. You can say, what are you talking about, Dennis? Sure. It's down 0.19%. It didn't work. Yeah, it did. If you hedged it with anything, you're down over 1% of the overall market. That's a 0.8% outperformance against SPY. This has a higher beta. So, I mean, you would expect this to be down more than SPY. It's barely down at all. Robinhood and Reddit just continue to be monsters. Obviously, the bar is super high for both these stocks going into the reports. Reddit, the bar probably couldn't be higher, but I don't know. Like you're at this point where these stocks are so loved. I mean, maybe they do get over that higher bar. Christian, these kind of are your stocks. Let's talk and break down the technicals on RD, DT, and Hood.
Well, the stock last, so this is always like to my point, when a company has a very big earnings report, sometimes it just there aren't sellers in the name. This stock going back to October 29, this stock went up 42% on earnings day. 42%. And again, like you go back to conventional wisdom and some think, "Oh my God, like that's up way too much. It should be sold." And sometimes you're thinking, and here was the gap up 42%, right? So look at what the stock has done since then. So do you see how like a strong earnings reports sets that bar? And even though you think, oh my God, I missed it, the stock went up 42% to 115. We're sitting after 3 months at $220. This happens all the time in
Mhm.
terms of names that surprise, and they will just keep running like this. There aren't any sellers. Now, what could change here is that if the company doesn't grow as fast, I mean, now the expectations are going to be super high. So this, I don't know, in a stock like this that's had a run since not only what it did in last quarter on earnings, but the follow through that it had is amazing. So again, I'm just going to say this one more time. If you think sometimes that you're buying high, right, you have to kind of put this with the surprise that it had, and it overwhelmed, and it's an amazing move since the last quarter. Now it's so much more difficult, and I personally am not touching this because it's just gone up too much for me, and
Mhm.
if it doesn't deliver on earnings, it's going to get hit pretty hard. That's my
Sure.
take on it.
All right, Christian, you probably got a hop here, yeah?
Yes, guys, have a great rest of your day, and I'll see you guys tomorrow.
All right, later, Christian. Have a good day. Good luck out there. Dennis, you want to stick around here
Yeah, I'm
for
going to stick around for the interview
our
here.
special
For,
guest?
for
Okay,
sure.
awesome. Awesome. So let me run this intro and then we'll welcome our guest on here. There he is. There we are. Aurthur Bass, Managing Director, Fixed Income Rates Futures on Wedbush Wednesday. How's your day going? How's your 2025 going, Aurthur?
So far, it's going fine, and I guess if you're an inflation hawk, it's probably going fine as well. I think we're going to have an exciting year in all markets. I deal in rates, and I think it's going to be certainly some ups and downs, and definitely some excitement, which we've had so far.
I think at the least we can say it's been an exciting year. So you were like you were pretty sure you were pretty confident that the Fed was going to be on hold for quite some time here in 2025. How did the CPI data and maybe ahead of the PPI data tomorrow affect that opinion for you, Aurthur?
I'm First, let me say I'm still going through the details of the number on the
Sure,
surface.
sure.
It's a very strong number, zero point 0.5 for the month versus zero point 0.4. The 3 month average is 0 0.4. Core CPI, 0 0.4. The actual unrounded was 0.446. So it actually came fairly close to getting a 0.5 rounding versus 0.2 last month, 3.3% year over year. I want to preface first off with two comments. One,
Okay,
January historically is a bad month for CPI. A
sure.
lot of companies institute price increases in January. It's the non-season adjusted number was higher. They make an attempt to adjust for this, but this is the third January in a row that we've had a zero point 0.4 core CPI. So I'll mention that as one comment. But having said that, it was a bad number. I mean, the owner's
Mhm.
equivalent rent and the shelter is still being a problem. 0.4% increase in shelter, owner's equivalent rent 0.3. The biggest surprise was transportation. Transportation services up 1.8% in the month, which is huge. Medical care up 1.2%. Used cars up 2.2. So you can go through a number of the details and see where the increase came. But when you combine this, and you remember last Friday, in addition to the employment number, we got the Michigan number.
Mhm.
Uh, the 1 year inflation expectations rose from 3.3 to 4.3%, and the 5 to 10 year rose to 3.3% from 3.2. So if I were the Fed, the risk that they're having, and I would imagine Mr. Powell's going to get some questions on this at 10 o'clock when he starts his testimony before the House.
Sure.
is inflation might be coming back. And as you mentioned earlier, Brent, yes, I do think the Fed's on hold probably for the whole year, at least through June. I mean, at this point, June's now
Sure.
the first live meeting. There are a number of firms still predicting an ease. The whole thing there, and nobody knows. I mean, who knows what the numbers are going to be? Who knows
Right.
what tariffs are going to impact? There's a lot of unknowns here. We've gone a long time with the inverted yield curve and the SOM rule and a whole lot of other things predicting recession that hasn't happened yet. But the longer the Fed is on hold, and so far it's been one meeting, but when you get out to 3 or 4 meetings on hold, then it becomes more of a question mark: is the next move an ease or a tightening?
Yeah, what did you I saw that in a recent note that you did, Arthur. What did you mean by that? Like an ease versus a tightening? I was interested in that
Well,
comment.
I mean, the markets are still pricing. Just looking at my pricing right now, they're still pricing. Actually, it's down to 10 basis points in June. They were pricing 20 before,
Yeah.
but we're pricing a full ease by the end of the year. So the markets are still anticipating an ease by the end of the year, but the longer they're on hold, and usually I think it's like 7 months or so before they might shift if you go back historically, but um, the longer you go, the more the data is going to say. Does it? If inflation
Right.
does come down, and if tariffs do increase prices, and if we don't get as much boost from drill baby drill as we hope we do,
Yeah.
then expectations are going to start changing. Pure and simple. The one thing I will say about Powell, and I'm going back to his congressional testimony in 2022, right before the Fed started. I'm trying to remember which senator asked the question, but they made a comparison with Paul Volcker, and they went back to Volcker and they said, I remember Paul Volcker, and he had the courage to raise rates and keep them higher longer than people wanted and higher than people wanted. And do you have the conviction to see this through? I mean, we really kind of into that. And Powell was very resolute in his answer, and it's worth googling
Mhm.
this. And his comment was, when the history of this is recorded, I hope the answer to your question is yes. And answering that in
Sure.
that manner, I mean, I think he means it, and so I think he will do what's And yes, I believe he waited 6 months too long to begin tightening, and you can go through a number of reasons on his reappointment or other things with that, but I do think he's got the conviction to do what he believes is right for the country on that.
Arthur, I just
Sure.
want to expand on this because I don't think anybody has it on their bingo card about Titan. And I mean, it's interesting to bring up that point because we could be in a scenario like this is not great news. We're seeing inflation tick higher ahead of tariffs. The tariffs are just coming in here, and we know tariffs can be inflationary. Is there a scenario in there where they actually could go the other way and tighten? Because I don't think anybody has there on their bingo card. Expand on that thoughts.
I
Yeah.
agree with you. I mean, the markets are still pricing an ease by the end of the year. They were pricing 1.5-year eases by the end of the year yesterday, but markets can change. I mean, we've seen 100 basis point moves, in markets as expectations change. We had that going. If you look at Eurodollar, SOFR from September to now, there's been over 100 basis point move from expectations changing. The other wild card, and I'll throw this out there, which could go the other way. You got the Doji and Elon Musk and his effort. If they do reduce expenses by $1 trillion, or maybe I guess their original estimate was $2 trillion, and we do get a sea change in that type of thing, that could be a watershed. And while the amount of debt outstanding is tremendous and it's a problem, and it's 120% GDP, which is historically extremely large outside of when we're at war. Well, that's still an issue. If we're successful on reducing the expenditure part of the budget, that could go the other way. So I mean, there are a lot of unknowns to be determined this year, which was I prefaced my original comment. I think we're going to have a very interesting year for many reasons.
Mhm. So the guys were right after we got the CPI data at 8:30. The guys were looking at the TLT a little bit. And, I think you're hinting here at a lot of implications for bonds, but could you give us a little insight into your outlook for bonds, at least going into like summer of this year?
My outlook for bonds is negative. I think the
Sure.
amount of, I mean, we're a little bit distorted right now because we've got the budget, the budget increase that has to be done, and Treasury's using extraordinary measures, at least are starting to at the moment. I thought it was interesting that we did not get an increase in coupon sizes, but that they left, which was expected, but that they left the terms in that they don't expect to for the next several quarters, which that led to a little bit of a rally last week that we had. I look at the entire move we've had. We had a large increase in rates in September into January. We rallied on last month's CPI. Not that it was that great a number, but it wasn't as bad as expected. I mean, I looked at it that it just wasn't as bad as the biggest fears went. I think rates are going higher in 10 years, that which I'll use as a benchmark, because of the amount of debt, because of the burgeoning inflationary development we have, because I'm not sure we're going to get as much impact out of increased drilling as expected, partly because just where prices are, how economical is it for doing more shale, and I'm not an energy expert, so I'm doing this from a fixed income slant,
Right.
but not expecting as much move. Again, with everything, the numbers are going to determine, of how that goes. I'm optimistic on the spending front, and if that can be successful, that, as I mentioned, that could be a game changer.
I don't think there's probably a better day we could have had you on, Aurthur. I mean, we're getting, important inflation data. We're getting changing expectations for the Fed here into the second half of this year. Appreciate you coming on today. Hope you have a good rest of your day, sir.
Well, thank you, and it's a pleasure. Okay.
All right, until next
Thanks,
time.
Aurthur.
Bye-bye.
All right, Dennis. How you doing over there?
Just wrapping up here.
Yeah.
We've continued to leak. We're trading near the lows. The NVIDIA rally is not happening here. I've been wrong on that one for sure, and I'm getting hit on it because of it. It's even falling off further. I would have thought they'd hide there. They're not. It's fallen another 1% here. So I don't know if there's extra news I've just missed on it, but it had a really good fall here. So not doing well on this one. It's one of those days, man, where again, we talk about the fade trade in 2025, and there's going to be rips, and there's going to be dips, and there's going to be opportunities to get back in. If you're chasing in 2025, you are absolutely doing it wrong. This is the year where we have seen whipsaw actions. There's going to be more Trump headlines coming that are going to go up and down and all over the place. So I think we're still in this market. When you get the 6, 7, 8% pop, you take the profits, and then you maybe reload, or maybe, you're shorting stocks if you do short stocks into the pops. But we've got to really respect that this market has no direction right now. We also have to respect what the Fed is thinking. Like, just imagine being the Fed and they're seeing inflation tick higher ahead of tariffs.
Oh, man.
There's no way in the world they're thinking about cutting here right now. If they get a little bit hawkish, it could really spook the market. So I think you still have to stay away from the interest rate sensitive names. And you know what else, folks? You don't have to buy anything. It's not necessarily, traders are still like, hands. What do I have to buy? What do I have to buy? Sometimes the trade is just not to buy stuff. Sometimes the trade is just sit back and say, hey, I don't have to be a hero here. There's a lot of unknowns. Let's let this, dust settle and come in when it's a little bit safer, when it's not storming out, when the waters aren't so choppy. Because right now, we're in really choppy waters, and there is no general direction. I've been raising some cash in the long-term portfolio. You know that. When I sold my Tesla position, selling out of some, obviously sold a lot of my NVIDIA, but I did rebuy some at 113. I don't know today, like you look at this, 129, it's leaking. I would think that they would bounce the stock back. It's not happening in early trade. You really want like immediate gratification on this stuff. So maybe my thesis is wrong there that they're going to come in and buy tech stocks today, because tech stocks continue to leak. We're now trading at the lows here. The market's spooked on this number for sure.
Yeah. Dennis, a really good wrap, some really good advice that you gave there at the end.
We don't give advice, we just give ideas. We never give trading advice.
Excuse me.
Yeah.
Tomorrow,
slap you on the wrist for that word.
I'm fine with that.
Words of wisdom. We like words of
There you
wisdom.
go.
That's what it's called.
Our guest at 8:35 tomorrow, one of our favorites, Jim Tassoni from Armor Wealth Strategies over on the west side of Michigan there. I think that's going to about do it for today. No advice, Dennis.
Yeah, Jim's been all over
good
this
words
too.
of wisdom.
Yeah.
He really has. So I'm excited to hear what he's got to say. Maybe he'll comment a little bit on the PPI, but we'll get a good general view from Jim tomorrow. We'll be back tomorrow with Thursday's show, pre-market prep, ladies and gentlemen. Everybody have a good day and good luck with your trades out there.